Hi guys. Today we will analyze Skyworks Solutions stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a bad performer in the overall market. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Support level is around $133. Strong support levels are around $120 and $100. Resistance level is around $149.50. The next resistance levels are around $173 and $192. In the last month the stock has been trading between $128.50 and $148.70 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2 million. This is a good sign as it is always nice to have a liquid stock. The stock has been falling since July 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 10% per year, for last 5 years. We see that the average profit margin of the stock has been around 26% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 97% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Skyworks Company: bad, average, and good. First scenario. Skyworks will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 22%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $110. Second scenario. Skyworks will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 25%. Future free cash flow to net income rate would be average, 85%. In this case, the fair value of the stock today would be $140. Third scenario. Skyworks will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 28%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $177. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 8.32. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Skyworks, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 12. Again, I will use 3 different scenarios for Skyworks Company: bad, average, and good. First scenario. Skyworks will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 12. In this case, the fair value of the stock today would be $51. Second scenario. Skyworks will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 16. In this case, the fair value of the stock today would be $81. Third scenario. Skyworks will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 20. In this case, the fair value of the stock today would be $120. As you can see, today the stock is overvalued, $139, even if we expect the company's high performance in future. The fundamentals are good. But the stock has been falling since July 2021 and the stock is currently a little bit overpriced. Most likely the stock will continue falling for a while. I may consider buying the stock when the stock drops below $120. Company strengths. Skyworks designs, develops and produces analog semiconductors primarily focused on the radio frequency, RF, chain. The company operates worldwide. Key products include amplifiers, attenuators, modulators and demodulators, filters, diodes, front-end modules, switches and opto products. Mobile will see greater 5G adoption, which is aiding RF content growth. Broad markets will benefit from adoption of technologies such as Wi-Fi 6, 5G wireless infrastructure, and secular shifts in automotive. In fiscal 1Q22, Skyworks demonstrated the sustainability of its revenue stream despite seasonal softness and intense competition from Broadcom and Qualcomm. Another key positive is ongoing expansion in Skyworks' broad markets business. The company has solid profitability and good guidance. Skyworks has a return on assets of 16% and return on equity of 26%. This is amongst the best returns in the industry. Skyworks has a profit margin of 27%. This is amongst the best returns in the industry. The revenue is expected to grow by 8% on average over the next 5 years. In the coming 5 years, the EPS will grow by 10% yearly. Risks. Skyworks' revenue base is highly concentrated on a few customers. So, risks facing Skyworks include its 50% revenue reliance on Apple, which has a reputation of extracting tight margins from vendors and sometimes dumping vendors unexpectedly. Other risks relate to the highly cyclical semiconductor industry, which can contribute to sharp annual and quarterly fluctuations in operating and financial results. The semiconductor space is also highly competitive, which creates persistent pressure on average selling prices. Lower than expected global economic growth, and slower than expected end demand for mobile devices. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.